Welcome to the KOSEC Show. Join the KOSEC KODARI Securities team as they share their insights on the Australian share market, discussing some of their best performing companies, macroeconomic news from offshore, including local domestic news, foreign exchange, as well as commodities. If you have any questions regarding the share market, our phone lines are open. You can dial in on 1300 854 151 or alternatively, email info@kosec.com.au. Exclusively on this show, each guest will reveal their hottest stock pick. For more information on any of the topics discussed, go to kosec.com.au. The information featured in this program is general in nature and does not take into account your personal circumstances, needs, or objectives. Guests appearing on the program may own or have commercial arrangements with some of the companies mentioned. Before making any investment insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.
Good afternoon, investors. My name is Will Brownlee and welcome to the KOSEC Show, where we discuss all things relevant in the market this week. Macroeconomic data, currencies and commodities, top performance of the week that was, and of course, our hottest stock picks for the week to come. Before I go any further, please allow me to introduce you, as always, my investment panel and resident experts in the market, the ever wonderful Miss Caroline Wong. Is there a doctor in the house? Our doctor of maths himself, Dr. Adam Sharakovsky, and of course, the ever mystic Mr. Louis Mossman. Ladies and gents, welcome from lockdown Sydney. How is everyone feeling? How are we all doing?
It's a ghost town, really, isn't it? It's very quiet here in the city, and public transport as well is even quieter. So it's very strange, but anyway.
Not much happening, like not really affecting the market. We were up a good amount today. Saw another 0.5% rise today. We've had a lot of movement in that that middle cap sort of range. The ASX 300's been going on a bit of a tear. Yep. Seeing a lot of big movements. Unpack it. What's happening overseas, Mr. Mossman?
Well, overseas, I suppose that we've had the regular ebbs and flows. This week's narrative has, of course, been COVID-19.
Yes, of course.
But as you mentioned, it hasn't really impacted the market whatsoever. I think we ended the week very slightly down, but you can't really call it down, call it flat. And of course, we just had up and down days, really just correcting each other out. So at the start of the week, we obviously had that rotation into the Temple & Webster's and the Kogans. However, that kind of eased off throughout the week, as I think that the idea that this COVID-19 narrative would last longer kind of ebbed away, which I think most of the market would agree with. Though, of course, we did celebrate the end of financial year and the start of a new one. I don't know if there was any end of financial year parties out there. We didn't have one. We should have. I'm going to pitch that to the boss. But we did record our best financial year, though, in over 3 decades. So the All Ordinaries achieved a return of 24% in the last 12 months. That's a record for the last 34 years.
Wow, that's since the 80s.
Exactly.
Really.
Much higher than in Europe. That was around 13%.
Exactly. Well, it has, it did surge over the last, say, 12 months. As we've mentioned, it has lagged other major indexes.
Of course, yeah.
So we are might be catching up. So recently, over the last few months, this year, we have seen quite a strong returns.
I said, I think on my last podcast show, we're only 2% above our pre-pandemic high. Okay, whereas the NASDAQ is, 46% above its pre-pandemic high. So I think there's room definitely for us to be moving in the positive direction. But it's about where we find growth, and we are going to unpack that all throughout the rest of the session. I suppose today it's just really, really a big kind of call on what's looking good, whereabouts we can put our money, because it seems quite clear that the markets aren't slowing down anytime soon. We rallied into the new financial year, took a slight breather the day after.
Yeah.
Today we're back up. Things are looking pretty good. Caroline, I want to jump over to yourself because you've got some news about what's happening over in the US. Is that correct?
Correct. So I just want to talk quickly about the labor market. So this whole entire week, we've been listening so much about the US non-farm payrolls report. It's not out yet. It's out this evening. But I'd just like to talk a little bit about the labor market. How tight it is as of now. If we jump straight into the chart, we can see both a bar chart and a line chart. So the bar chart represents hiring plans, and as of last month, 28% of firms express their plans to hire more workers in the next 3 months. Mm-hmm. And then for the line chart, you can see that shows compensation. As of last month, 39% of business owners, reported raising employee salaries. So what this shows is that it's a very tight labor market. These figures are trading at the highest since 1986. That's before I was born. I'm sure before you were born, Will.
Oh, yeah.
Touchy issue.
Touchy issue there.
Yes, but anyway, as of this morning, we saw U.S. unemployment claims falling to a record low, record pandemic low. So that's about 364,000. Those gone were the days where it peaked about 1 million cases. Yeah. So now it's at 364,000. That's very good. But as of now, there's still about 11 million Americans sitting on the sideline, which shows that those people who have been retrenched, they're not too keen to come back to the labour market.
It's so weird. I think because we're seeing that a lot in our own newspapers. It's so strange. It's like I saw an article in the AFR about they were saying 40% of millennials are ready to leave the workforce because of COVID, or leave jobs, or quit, or move into something else. Absolutely unbelievable. It's like you know. Long gone are the days I remember talking to my parents, and they're like, yeah, you had one job and you just worked in that job for most of your life, you know, and then that just isn't the case anymore. People are now going from hopping between jobs to actually not wanting to be employed at all.
And then in between those jobs, but in between their hops, they take like a gap year to go holidays.
Gap year, because it's so...
Of course, I think over the last, say, 12 months as well, the government benefits have been so generous that people are, and we know, a record sitting at high levels of cash in their bank accounts. Australians are very cashed up, so yes, they might be able to support themselves throughout longer periods of
what else are you going to do with it at the moment?
Exactly.
That's a lot of people saying that. They say, well, we're in lockdown. You know, we've got Uber Eats and Deliveroo, and we've got a great Netflix subscription. What else are we going to do with all of our, whatever we're going to do with cash?
Well, I think the first lockdown proved exactly where that money went. It went into speculative assets, went into the stock market, went into cryptocurrencies. And of course, the first day of announced lockdown, we saw the market surge as well, because as you've been saying all week, people, the first thing they do when they get home is maybe check their share trading account, read a bit of the news, jump online, and then they're obviously at home and they've got the time to maybe give more focus to, investing in the market. Of course,
it's, like I said before, I said to a lot of clients, everyone gets sent home from work to go work from home. Everyone starts working less. They all look at their accounts online. They will start calling through to Will and asking me to do things, and the market goes up, so everyone starts calling in more, and it always ends up to be they work less, I end up working more, which I think is grossly unfair. However, I am happy because I like my job. Let's rewind a little bit. Let's go over to Europe. We don't talk a lot about Europe, but Mr. Mossman, I want you to give a little bit of a read because I know you love your inflation. So have a little bit of a chat to us about that.
Yes, of course. So we do remember, of course, last week we had the FOMC meeting that really took a hit on gold, pushed the US dollar higher and dragged the Aussie dollar lower. Now, this week, of course, the whole concern about that is inflation, okay? And that's the reason why the central banks are really tiptoeing around the issue of money printing and low interest rates, because they don't want to impact the...
Talking about a lot, some would even say it's a bit of an inflated topic right now.
That's good. Europe might argue with that, because in Europe, we actually did see, and we have a chart for this, we actually saw inflation ease off for the month of June. So currently sitting at 1.9%. I really think this does go to show, and as I've been saying, it is an issue, but it might not just be a pressing issue for right now. So for some time I've been talking about it, but I think this proves it's not runaway inflation, and it's not inflation that is completely out of hand yet. So I think it's something...
Talk to me about what you mean. A question, because I've got a good understanding of it, obviously, but I know it's something that a lot of people ask me. When they talk about transitory, when they say it's transitory, inflation's transitory. What do you mean by that?
What I mentioned there is, of course, inflation that is runaway, right? Yeah. Runaway inflation, because once inflation gets to a point that central banks can't do everything, what we see is those hyperinflationary countries such as the South American countries, the Venezuelas of the world, where no matter what they do, prices continue to rise, prices continue to go higher. And that's what people are scared about. And then that sudden hike in interest rates is going to absolutely crunch the market. Now, I think this goes to show that it's quite natural, demand-driven inflation based on economic activity. That's why a lot of the people are very comfortable about what the data coming out of Europe. The Bank of International Settlements also reiterated that this week prior to this inflation data coming out, simply stating that this inflationary period isn't something to be concerned about. And again, it's very natural to what we're seeing right now. So I think that data proves the point, and I'd be in very much concurrence with that.
But let's go a little bit more local, because that's Europe and that's the US and stuff. Dr. Adam Chadakowski, talk to us a little bit about what's happening here, because we're obviously in the thick of things. Victoria's been taken out of lockdown. We've been slammed into it. It's pretty all up in the air right now. We're widespread now. Everything's sort of affecting everybody at the moment. What's your take on it, good sir?
Well, so certainly it's coming back and forth. And so I actually, so I had a little bit of a map to show you really what's going on. So it's, so let me just put forward. So it's showing exactly what's happening in the entire of Australia. So in red and in orange. So we're seeing...
It's like the bushfires last year.
It's like bushfires. So really, so the red is showing where there is a lockdown right now. So that's some of them are like snapshot lockdowns so in Western
snap lockdowns.
Yeah, like 4 days, 3 days. So Western Australia 4 days, Queensland 3 days, the Northern Territory also a few days on, and all ending Friday. And then we have New South Wales. New South Wales is a little more serious, so that one is expected to end on the 4th of July. But when you ask, so actually Carrie Chand, the head chief officer of New South Wales, she was asked to comment on whether it will end on the 9th of July. And I'm quoting her answer, "I am not commenting at all about the future settings." So there is a little bit of an expression of concern.
What do we think? Do you think we're going to continue? Do you think we're going to come out?
How many was it today? I think it was another 31 cases today, yes. And as Gladys also mentioned, that we're quite behind the peak of what we were 2 weeks ago. So we're still in catch-up mode. Yeah. So we're halfway into a lockdown that we've seen for a week now, and we're in catch-up mode. It doesn't seem to me that that's just a 1 week more thing to go. So I think they've been buying themselves time with 2 weeks. It's not to shock people, but I believe there's another announcement either tomorrow. I think she's holding a press conference, Gladys, announcing their expectations for the next week. So my personal opinion will be that it will be extended.
It's a pretty tricky thing. Like I always say, we have very difficult jobs when we work in the stock market. We're trying to pick what's going to go up and what's going to go down. Obviously, you can't get everything right, but I think her job is even harder than that. She's got to pick what's going to happen, and anything could change, in a like things could just suddenly just even back out again. But the thing that I'm concerned about is, of course, how long was Victoria in lockdown for? They were like what, month or?
They were in the lockdown for the majority of last year, really. Yeah, they were locked down very heavily. What we were seeing as well this week, and this comes to Australian politics, which isn't usually that exciting to tell you the truth. Usually you focus on the US and around the world. We actually saw this week a lot of the state premiers falling back on their own stuff-ups and blaming it on the rollout of the federal government of the vaccines. So a lot of the state governments are finding it very difficult to control the outbreaks. There are so many variables to control, and they're receiving a lot of criticism for that, which I completely understand their point of view, because it is so difficult to really maintain and control a virus like COVID-19, and especially this Delta variant, which is scientifically proven to spread quicker and is more infectious. So all the state premiers did take back and say it's the federal government's fault for not rolling out the vaccine quick enough. And then ScoMo went right back at them saying, no, actually, this vaccine's doing quite well at the moment. So I think we've got 8 million vaccinations administered. That's not first and second jabs. That's at least one. Yeah.
And I think what was it, there was a party in Bondi recently. There were 30 people that attended. 25 of them got COVID or something, and then the 5 that didn't had the vaccination or something along those lines.
Exactly.
But Mr. Sherikowski, just going back over to yourself, any other sort of news, anything else that you're really seeing that's sort of giving you either hopes or fears to do with COVID at the moment?
Well, so I think we should be cautious. I mean, we are really seeing some of the highest numbers actually for the entire year of new cases over the last couple of days, but the also positive numbers in regards to the number of vaccines being made. So that is somehow good news. So, and we are seeing the market is responding actually quite optimistic.
Yes, of course. Yeah. Absolutely. I mean, a lot of people, as you said, cashed up. A lot of people at home on their trading platforms, obviously getting involved in the market.
Well, you think about the companies that really drive our indexes and our markets. You've got the big banks; they're not going to be impacted by a temporary lockdown. Yep. You've got major miners, producers. They're not going to be impacted by a short-term lockdown. They're still exporting all their materials overseas, and all of the other consumer discretionaries, as I mentioned, people are cashed up
online,
and they're online, so people still can spend. So the majority of our market isn't going to be impacted, I don't think. Although I do think it might be extended past 2 weeks.
Slightly frustrating at the moment, to say the least. Ladies and gentlemen, we're going to take a short break. If you have any questions for our panel, please feel free to take a video and email it through to info@kosec.com.au. Everyone who does will receive a copy of our book, Stock Market Success, Retailing in Dymocks for $39.95, or our magazine, Selling in News Agencies Australia-wide for $19.95. In the meantime, like, subscribe, hit that bell, and we're going to be back shortly with your currency and commodity overview.
As kids, we were active. We were creative. We questioned all things. We celebrated everything. We took risks. We had no limits. We had dreams. Our imagination helped us solve problems and create new possibilities. Albert Einstein once said, "Imagination is everything. It is the preview of life's coming attractions." We are in an ever-changing world filled with fear and uncertainty. Don't let that change the inner child within. As Walt Disney said, imagination has no age and dreams are forever. KOSEC is here to help build your dreams and create possibilities. Secure your success with KOSEC KODARI Securities.
Throughout time, humans have relied upon innovation to advance and evolve, using new and improved methods, having meaningful impact on society and industries. In order to advance, ideas were transformed into new products and services. The stock market has also evolved through innovation. Innovation has been key to KOSEC's success. Using artificial intelligence and machine learning, KOSEC has streamlined processes to bring better opportunities to clients. Opportunities that might have otherwise been missed. Join a company that innovates to bring clients the best opportunities and service. Invest with a solid strategy. Invest with confidence. Invest with KOSEC. KODARI Securities.
How do you get the highest returns in the stock market on a consistent basis? Obsessed with this idea, Michael KODARI forms KOSEC, KODARI Securities. He seeks, in his own words, a revolutionary investment strategy based on better information and knowledge. Wealth begins with better knowledge, becomes his motto. He seeks to identify and accurately pick the next top-performing stocks on the ASX. He seeks for consistency. Michael KODARI creates a unique stock market filtering system he names Lotus Blue, named after a flower that blooms just once. Because in investing, timing is everything. See how accurate KOSEC stock picks are. Get a free 7-day access to Lotus Blue today. If you want the KOSEC investment edge, you know what you have to do. Call KOSEC now or visit kosec.com.au and take advantage of the insights he reserves for his clients.
Do you follow currencies? Want to know how the Aussie dollar is travelling? Do you love commodities? Do you see gold prices rising? Do you see more demand for oil? Do you see the world economy growing? Get the latest in-depth analysis and discussion on commodities every week from real traders. Get real insights only on the KOSEC Show.
welcome back. Let's talk currencies and commodities, all things that shine, sparkle, fold, and make the world go round. Mr. Louis Mossman, we're going to go straight over to yourself, good sir. Let's have a chat about the AUD, the Australian dollar. Not something that comes up that often, but something that's going on a bit of a dive recently. In fact, I understand that it's taking nearly a 52-week low. Is that correct?
Yes,
broken
of
a great
course.
level of support.
Yeah, it has broken that level of support. So it will be tied into the macro and the FOMC, of course. So we saw, as I said last week, the Australian dollar take a significant dive. It did bounce up very quickly, though, and have about 5 or 6 days of nice green candles. But that low was tested again yesterday.
Dead cat bounce, we think.
Dead cat bounce. It was a classical dead cat bounce, and we saw it break those lows. So it is trading below now 75 US cents. It is looking very weak on a technical basis. In comparison, the dollar index has broken new highs as well. So the dollar index is, in comparison, looking very strong. So that's just
So it's a good time to go over to the US. Bad time to go over to the US.
Well, it just depends who you are and what you're doing. But of course, I think the real idea of that is the risk on versus risk off. So a lot of the weaker Aussie dollar movement has been attributed to the Delta variant, the management of the COVID-19 crisis, and over in America, there's continually robust reopening at the end of the day. Of course, I think the major driver for both of these, the Australian dollar in particular, will be the RBA's meeting next week. Okay, so
second Tuesday of every month.
So we're already in July, but the first Tuesday of every month. So the first Tuesday will be next week.
Yes, of course.
But as I've been mentioning over recent weeks, we are really waiting to see what they're going to do with their QE program, okay? Of course, we know that it ends this month, so we want some future direction of whether they'll be increasing, decreasing, tapering, and these are words that the markets are really triggered by.
Well, if you rewound to 3 weeks ago, before we went to this lockdown, I was saying we might be having quite a bullish picture on what they were going to say, easing, things have changed, rolling back, etc., etc. Now they're going to go in pretty much in the midst of a lockdown, and we should either just be out of lockdown for half the country. New South Wales will still be in, obviously, but there's a lot that can change between now and then. It's 4 days, and it's pretty telling. I mean, how can they possibly go out there and say, we're going to try and take things back to normal, and we're going to roll things back and look at tapering, if everyone's in lockdown and businesses are literally really, really struggling at the moment?
Yeah, I think following the Fed's meeting, and my own personal opinion as well, there would be at least a mention of tapering or even an action of tapering. Of course, we know our robust recovery and the current state of our economy is so far ahead of most developing countries in the world, right? So that was expected, but this lockdown has kind of thrown that out the window. So it's very unknown what they're going to do. Of course, if they decide to taper or reduce their quantitative easing program, that'll lend well for the Australian dollar, as of course that will lend to higher interest rates in the short term, and of course therefore a stronger Australian dollar. But again, that's very up to the question. I'm not too sure what they're going to do. I believe they're just going to extend their current QE program for the time being. So that's the Australian dollar. But again, I think the major driver, nothing this week. Next week, watch out on Tuesday.
Perfect. So speaking of bullish and boring, let's talk about gold and oil. One's bullish, one's boring. Mr. Adam Sherikowski, tell us a little bit about what's happening here. Which one's boring and which one's bullish at the moment?
Well, I would say there are quite exciting news in both of them happening. So I will start with oil. So oil was actually a little bit mixed the week. So West Texas was up while Brent was down a little bit. But what really triggered that was what happened Monday. So Monday was really a down for both of them. So one and almost 2% down, and the other one 1.5. So quite a dip, but they have really recovered well over the week.
So oil is above 20, above 75.
They are both above 75.
Yes, right.
So one of them is 76. So Brent and West Texas Intermediate is.
And gold's relatively range bound, just sort of trading a bit.
Gold
sideways
was actually like super flat, so it's plus 0.1%.
Yeah.
So
we'll call that boring.
Yeah, we can call that boring.
We'll call a 75 handle on oil. We'll call that bullish.
Yeah, but I mean, still some exciting things happening. So in regards to oil, so the most exciting thing that is kind of like in the eye. So Caroline already mentioned that OPEC is there is a little bit of attention what will be happening. There was supposed to be an announcement already today. So there is a tentative agreement to start adding 400,000 barrels a day. That agreement didn't really settle down perfectly, so there is some tension. So Russia, Saudi Arabia, they want more oil, but the agreement was blocked at the last moment by UAE. So we will be seeing what is happening. They have their own agenda. They really want just a better deal for themselves. They want to have their own tariffs for how much oil they can produce to be set up a little bit. But I am expecting something will be agreed on when the meeting continues on Friday. So we will see how that works. And for gold, so it was very flat. So one interesting news was that there was some news about gold that is unallocated. So paper gold, sometimes also called. What is happening there is new regulations in Europe that did happen this week. So from Wednesday on, now you need actually to allocate assets when you have paper gold in your holdings.
I understand. All very, very interesting. But yeah, one's doing well, one's relatively boring, going a little bit sideways. I do anticipate potentially a pop to the north for gold. I think it might be time for a little bit of an accumulation. Obviously, that consolidation pattern is something that technical chartists really look for, where it doesn't really go up or down, it just kind of enters in this consolidation. And we are seeing a prime consolidation for gold down there. And of course, the gold miners are doing the same thing.
Yeah,
so
they looked very strong over the last 2 days, the gold miners. They've had a quick rally up. They did pull
down
back.
Down today, but yeah.
Yeah, they did look pretty weak with the price of gold over the last 2 weeks, but I think the broader market consensus is very positive on the gold producers domestically.
Ultra patient on that front at the moment. Let's go over to iron ore. We've got our iron ore and Caroline Wong. We're going to cycle back to you. Last week we kind of mixed it up and we went to Dr. Adam, but we're going to go back to our old favourite. Have a chat to us. Does this mean you're bullish on it? Does this mean you've re-inherited it back? What does this mean?
No, it's just general advice.
Just general advice. Okay, perfect.
So prices of iron ore remains very, very elevated. As of Monday was about $216 per ton. As of Friday this morning, it almost touching $220 a ton. So anything above 200, I think we believe it's very, very elevated. On the upside, Australian trade surplus, the figures came in yesterday, and then we hit a record surplus of 9.7 billion, and that was the highest since records began. So out of which trade surplus, which means that exports minus imports, and that will give you that figure for a surplus. So it shows that exports are really doing very, very well, and iron ore on itself accounted for 40% of our exports, so that's quite a huge proportion. But on the downside, however, I like to bring you two sides of the picture. If we look at the chart, we have China's steel market expectations for July 2021. So this is a radar chart, and it shows you that for 2021, we can see that the prices are contingent on 4 factors. So that's inventory, orders, production, and prices. So we just look at the orange line by itself that shows expectations for July. You can see that all 4 corners of that line are trending towards the center. So what that shows is that steel prices, production, and orders are expected to soften this month. So that doesn't look too good for iron ore, considering the fact that China already expects that these 3 factors are not going to do too well this month.
Okay, so I've got a question for you then. Okay, and it's obviously sometimes I ask bullish or bearish, and you need to make decisions. Going to go up or down. I'm going to bring another one into the mix here. Are we bullish? Are you bearish? Do you think it's going to go up, or do you think it's going to go down, or do you think it's going to stay in a consolidation pattern above 200? Where are you sort of leaning at the moment? Do you think it can just remain at these elevated levels, or do you think we're headed for a pullback, or do you think we could shoot higher?
My personal opinion is that it will consolidate at these levels for a while before
above
trending.
The 200, okay,
before
trending down. I think that's it. So, I mean, it's interesting, isn't it? Because some iron ore players have got a lot of catching up to do. I was looking at 40 square metal, beautiful narrowing wedge, classic movement towards the north anticipated. Breakout could potentially be coming, whether that's north or south. Hard to tell. Certainly not a space that I'd be overly bullish on at the moment, because where's the growth going to take? But speaking of growth, speaking of something that is still looking bullish, let's go over to Mr. Mossman and talk to us about Bitcoin, because ever since we had those guys on the show a couple of weeks ago, we've had nothing but down. I mean, what's happening?
Yeah, I wouldn't call it nothing but down. I think it's just been everything except exciting. It's been very boring. I mean, Bitcoin and Ethereum and most of these top 10, say, cryptocurrencies have been very sideways trending. Ethereum went on a little bit of a run earlier in the week, bouncing off a really strong level of support, but again, really just hovering in that mid $30,000 range, well below its highs this year.
2,000, you mean? 2,200 Ethereum.
For Ethereum.
Oh, so I'm talking about Bitcoin. Sorry,
Yeah.
Bitcoin is mid 30,000 range. I kind of use Bitcoin as
It's okay, you're first down the job.
I kind of use Bitcoin as a meter for the rest of the crypto
okay.
market sometimes, of course. I think the only real news and announcement this week was coming out of El Salvador.
Yeah.
As we know, recently they made Bitcoin legal tender in their country, and as our cryptocurrency guests told us, that was in fact stores have to accept Bitcoin.
Yeah, so they have to
Not
accept
only
it.
is it recommended, they actually have to accept Bitcoin.
Yeah, so
as
in
a
the
form of
past,
payment.
this is the first one of a kind. It's been accepted in Japan.
Yes.
Before in 2017, they accepted it in Japan, but you had the option to accept it back then. In El Salvador, you have to accept it. It is mandated by the government.
Yeah,
now,
of course.
I was looking at the charts the other day. I was looking at Ethereum.
Yes.
And I was looking at Bitcoin. I was looking at those charts, and I said, I've known about crypto for a long time. If I hadn't known anything about crypto, if I didn't know anything, if I was just looking at it on a chart, it's a chart of anything, I would be going really, really heavily into that because it looks really good on a technical basis. If I didn't know about how badly it could swing down based on announcements, I'd be saying on a technical basis that's looking like a very strong level. Forget all the information that can come through. Forget the volatile swings. I think, would you be in concurrence, team, on that one there?
Yeah, well, there was actually earlier in the week one of the founders of Ethereum on CNBC giving a bit of an interview on crypto winters. It's a term used to coin a period of time where cryptocurrency gets wiped out of the news. A lot of the crypto investors get burnt. The cream gets taken off the top of the market, and a lot of the retailers get burnt. And of course, there's quite a quiet period in cryptocurrency markets before we swing higher. Now, his hypothesis was, in fact, that these crypto winters are becoming shorter and shorter because the relevance, importance, and the size of cryptocurrencies becomes more relevant to people. And I would be somewhat in concurrence of that as well. As you mentioned, they look very good on a technical level of support. However, I wouldn't hesitate in saying that they could go lower, of course, but I don't think it's going to be a 2 to 3 year winter like we had after the last bull market.
But it's interesting, isn't it? Because we also go through bear markets in the market as well. And I know at the crash in 2008, it was 16 months before we sort of started to recover. It's a long time to be in a bear market. And, we did that, which just goes to show that things are changing because we dropped 45% in 2008 and it took us 16 months to do that. Last year, we dropped 33% and we did it in 3 weeks. So, and then we recovered pretty quickly. So it's all over the shop. It is certainly a very, very exciting time. Ladies and gentlemen, that's commodities and currencies and the events that have shaped them. Now, are you a bull or a bear? Let us know. Our phone lines are now open. But for now, like, subscribe, and hit that bell. We're going to take a quick break. When we get back, we'll take a look at what the best and worst performers in Australia were this week.
The world changed this year. So did the stock market. Is it time for a change in your portfolio? Invest with confidence. Invest with a solid strategy. Invest with KOSEC, KODARI Securities.
RBA has cut interest rates to a record low of 0.1%. Returns in saving accounts are now shockingly low. We have never seen these conditions before. The good news is that the stock market benefits from low interest rates and historically has outperformed property or any other asset class. KOSEC uses a unique stock market filtering system called Lotus Blue, which helps generate solid profits for clients. During COVID in April 2020, KOSEC recommended Kogan, which went up 340%. In June, KOSEC recommended Saracen Minerals, which went up 23%. In October, KOSEC recommended Nickel Mines, which went up 33%. If you want your money working overtime, you need to know what stocks to buy and when to sell. That's where KOSEC can help. With no barriers to entry, it's just simple investing. Build wealth with a concrete investment strategy. Go to kosec.com.au. Get a free 7-day access to Lotus Blue and receive our top 8 stock picks today.
Throughout time, humans have relied upon innovation to advance and evolve, using new and improved methods, having meaningful impact on society and industries. In order to advance, ideas were transformed into new products and services. The stock market has also evolved through innovation. Innovation has been key to KOSEC's success. Using artificial intelligence and machine learning, KOSEC has streamlined processes to bring better opportunities to clients. Opportunities that might have otherwise been missed. Join a company that innovates to bring clients the best opportunities and service. Invest with a solid strategy. Invest with confidence. Invest with KOSEC. KODARI Securities.
Welcome back. Let's move on to our next section now and have a look at what the best and worst performers for the week were. Were there tears shed this week? Who has Christmas come early for? And what has happened in the world at the moment? Caroline, you've got your chart.
Yes.
You've got your chart of what's sort of been happening and where is everything sort of placed at the moment? What's done really well this week?
Yeah, we look at the chart. You can see that it is more reds than green, but that's not a bad picture entirely. So top performing sector this week. Communication services up 2.33%. A lot of it was done by Telstra. The telco was up more than 5% this week after announcing that it will be selling its 49% ownership in its tower business. And then the second top performer is materials, up close to 0.5%. So this will basically base on nickel players. So
Sorry, quick question. Just interrupting in there. Keep the chart up. Keep the chart up, producer. Just when I look at that chart there, we did okay for the week. Well, our index was up for the week, but a lot of sectors in the negative.
Yeah, that's right.
It's quite interesting. What do you think about that? Just financials down, therefore that sort of pulled things down, or what's your take on that, Caroline?
My take is that there is no definite answer as to where we are going to growth or value. It's just turning round and round like a merry-go-round.
Yeah, perfect.
Well, another thing to keep in mind, even though the red bars are quite severe, maybe it looks like that, but some of them have very low weighting on the overall index.
Anyway, continue, Caroline. Sorry for interrupting
you. That's okay. Materials was up close to 0.5%. IGO Limited, so this is a mineral exploration company that's involved in nickel, copper, and gold. That was up 5% this week. Nickel Mines, so this one is a pure nickel player, was also up 6% this week.
But that surely that was today though, because Nickel Mines was up 5.5% today. But it has been a very consolidating chart, if we could go all technical on you once again. Very consolidating chart. But I think we'll get to that in a second. I have a suspicion.
We'll
Stay
save
tuned.
the best for the last. But in terms of the worst performer, or rather not too outperforming sector, that's energy. So we can see that energy was actually down 1.2%. What you see is that beach energy, even though oil prices are doing very well, it's not responding to oil prices. It was actually down 2% this week.
That's a very big puzzle for me because oil is now above 75 and it's continuing to be quite bullish, and beach is low, and I mean beach is very low right now. And it's just one of those things where you just think it's not really... it's sort of defying logic, and it's defying belief in a lot of ways. I'm not even going to pose the question to the group about why that is, but Louis, you think you might have an answer? Or
Yeah, well, a lot of the time, and this is how through the stock market in particular, you can get exposure to so many sectors and commodities as well without actually having to buy a physical bar of gold or a barrel of oil. You can invest in the producers of those. But you also have to remember that there are company-specific factors that are driving the share price as well. Okay, so we have seen a number of gold producers such as Newcrest, Northern Star, and Evolution, somewhat softer when during the pullback of gold. We have seen another gold miner, Perseus Mining, absolutely shooting the lights out, breaking past its previous highs. Now, of course, it depends company specific, what they're mining out of the ground, how much they're mining it out of the ground, and at what cost as well. So there are other factors at play individually. So it doesn't mean when you buy a gold stock, you're just buying gold bullion. Of course, it does give you that exposure, but there are, of course, company-specific metrics you have to look at.
Because, I mean, if you're going to go very technical into reasons that affect share price, obviously the first one is supply demand. Then, of course, you go into the commodities, how that's affecting, which is, of course, supply demand. But then when we get to underneath all of that, at the end of the day, gold's gold, you're mining gold, the share price will move on that. We get into the more sort of finite and the sort of the more... I suppose the more detailed versions. What's their corporate governance like? What's their management like? What are their hiring? What's really happening in terms of their leasing agreements, long-term debt, short-term debt, liabilities?
Recent acquisitions as well. Exactly. That's a huge driver, you know. And of course, if you've got a mine, it just has to be profitable. It depends how profitable, and that will impact your share price. Because you can find a lot of gold and you can mine it out, but if it's costing you a lot, then there's no profit margins to justify a strong and increasing share price.
So I think, and I do really think this honestly and truthfully, that a lot of, I think the Australian public is becoming a lot wiser in how they're investing. Big fund managers are getting a lot more savvy about how they're investing. Long gone are the days, I remember 2017, if gold was up, all gold places went up. Oil up, all up, down, down. And it was almost just predictable. Now it's because gold's been flat, but we saw Northern Star up 3% the other day, down 1% today, all over the place, and gold has quite literally done nothing, 0.1%, is that right?
This week. I think Caroline made a perfectly summarization of the market this week. There's just been capital flows in and out between sectors. There hasn't been, absolute clear outperformers, and we've been going up and we've been going down. Of course, as I mentioned earlier in the show, we had Temple and Webster and Kogan shoot the lights out early in the week, but very quickly ease off. Based on the idea.
Temple Webster's down 16% in the past 2 days.
Exactly
go
right.
figure.
And then Qantas. We're being hit with the lockdowns. Qantas was up about 4% today.
Do you reckon that's a big puzzle? Because that thing it defies sort of.
It's the exact opposite of Temple and Webster and Kogan. It pulled back at the start of the week and it's gone up today. So again, I think that motion, which for people who are listening on Spotify and iTunes, I'm twirling my finger in a circle because money's just flowing in and out of sectors as fund managers, again, as you mentioned, become more savvy and really trying to be stock specific when they're allocating their funds. And that's where it has to go.
Yeah, so you mentioned Northern Star, for example. So, I mean, they are doing really great when you look at, again, some of the details in the performance. So, for example, one of the things I was looking at, look at the numbers, like, for example, they have world records in how cheap they can produce.
They're mining. I remember 2017, they were mining gold at $990 US an ounce, $990 US an ounce, which was the cheapest on the market at the time. That was back when they were $4.
Yeah, I remember. It's so company specific.
I actually remember Michael KODARI, the CEO, going on the Sky Business Channel and saying Northern Star was going to be the buy, and that was at $4. So hey, brilliant, good pick. Done it exceptionally. So you've got great analysis team, ladies and gentlemen. As always, we've had a video question that's actually come in throughout the week. We've selected this one, and we're going to go to that right now.
Hey guys, just wondering if you think it's a good time to get into growth or value stocks at the moment. Cheers.
Whoa, okay, that was very, very quick. That was pretty straight to the point. Cheapers, okay, I like that. Nice and quick, straight to the point. Oh, it's the old debate, isn't it? It's the old debate. We'll get the sabers out and start talking about what's going to happen from here, but it's value versus growth. Let's give our analysis on what we think about that. Here's the thing. You can't say both. Okay? So we're going to go straight to Mr.
You know me, that's what I say.
Yeah. So we'll leave Louis a little bit to think. What do you think, Caroline? Value or growth at this stage? So value stocks would be maybe in the industrial space, maybe the stuff like that that's been heavily beaten down, maybe in that sort of growth would be the old tech players, maybe the Kogans, the Afterpays, maybe that growthy type sector. What are your thoughts? Whereabouts are you sort of situated?
I won't say both. I say a little bit of both.
Oh, jeez. Come on, Carol.
Adam, what do you think?
Well,
explain what you mean by that. That's a fair quote. That's fair enough. What do you mean by that?
I mean to not put all your eggs in one basket.
Okay, so you think diversification is going to be the key for that, and have a nice mixture of growth and that. So maybe have your core portfolios, and then have that maybe your core stocks, and then maybe put some growth in on top of that. Interesting. Dr. Adam, what do you think?
Well, so at least one thing I could mention is the sentiment. So we had for a period of time the sentiment being growth is like the best thing, and so that has somehow made the value sector somehow, if you wish to call that underperform. So in using that somehow explanation, we could expect the value stocks to go a little bit up. But I do want to also confirm what Louis and Caroline is also saying. I mean, there are within values and within growth sectors that are good and sectors that are bad, and so on and so forth.
Okay, perfect. All right, so we really haven't got an answer yet, but that's okay.
I was just going to say, I'm going to give you a direct answer. If I had to be in one, I would definitely be in value. And you have to say something, you got to say it with conviction. So I'll say value. Now, the reason for that is I think the great growth cycle that we saw post-COVID-19 really benefiting from that tech space has not had its run. If I had to choose one, I would go growth. You got to think about it at the end of the day in risk reward. I do think both do have growth to do.
Yep.
And I think both of them are going to do well moving forward. But I do think the materials, the service companies, industrials have more room to run than these growth stocks in the tech space. Their valuations are already overstretched. I was actually speaking to accountants today about that, investing on a PE basis. Yes, their valuations are stretched. Yes, they've got heightened PE ratios. I still think they've got more room to run. They've great businesses doing great things. But if I had to be in one space, I would be in value.
The irony is that's probably the quickest question that we've ever had. And we could just unpack this for the next hour, because I would start going into things like, well, hey, is the growth stocks now at a value stock? Because Appen Technology is on a 3-year low, so is A2 Milk. That'd be typical growth sort of opportunities. They're very heavily beaten down. And, your traditional ones like Service Stream, which is maybe very, very beaten down, very, very low. Industrial stock, are these ones, and even something like Kogan, which is a very growth stock, 500% last year, that's still down hugely from its high.
And that's why I mentioned risk return. I think there is more risk. Risk posed in the growth companies because they've had such a strong run. If you're picky within the value sector, I do think there is lower risks, stronger return propositions in the value space than growth. So that's why I've picked value.
Very good. Well, thank you very much for coming in with that question. I feel like we may have just confused you. I certainly feel like we've confused our viewers, but if you do have any more questions about that, I'm more than happy to discuss them with you, as is everyone here on the research team. But do you have a stock that you've been watching for a while? Is it time to buy, sell, or maybe average in? Why not send us a message and we can ask our panel? In the meantime, let's take a short break. Don't forget to like, subscribe, and hit that bell, and we will be back with your final section of the show.
How do you get the highest returns in the stock market on a consistent basis? Obsessed with this idea, Michael KODARI forms KOSEC, KODARI Securities. He seeks, in his own words, a revolutionary investment strategy based on better information and knowledge. Wealth begins with better knowledge, becomes his motto. He seeks to identify and accurately pick the next top-performing stocks on the ASX. He seeks for consistency. Michael KODARI creates a unique stock market filtering system he names Lotus Blue, named after a flower that blooms just once. Because in investing, timing is everything. See how accurate KOSEC stock picks are. Get a free 7-day access to Lotus Blue today. If you want the KOSEC investment edge, you know what you have to do. Call KOSEC now or visit kosec.com.au and take advantage of the insights he reserves for his clients.
Trust is key to any relationship. Fortunately, it's nothing that can be bought. It's earned. As an investor working with an organisation, they need to demonstrate integrity. They must show consistency, full transparency, accountability. They must be genuine in their approach. Their core values must align with yours. They need to put your interest first. If you are considering investing, work with an organisation that earns and nurtures trust. Work with an organisation you believe in. Work with an organisation that treats you the same way they like to be treated. Join an organisation that views clients as people, not people as clients. If you are considering investing, consider KOSEC KODARI Securities.
As kids, we were active. We were creative. We questioned all things. We celebrated everything. We took risks. We had no limits. We had dreams. Our imagination helped us solve problems and create new possibilities. Albert Einstein once said, "Imagination is everything. It is the preview of life's coming attractions." We are in an ever-changing world filled with fear and uncertainty. Don't let that change the inner child within. As Walt Disney said, imagination has no age and dreams are forever. KOSEC is here to help build your dreams and create possibilities. Secure your success with KOSEC KODARI Securities.
Welcome back. The moment we've all been waiting for, the final section of the KOSEC Show. So this is what investors are really looking for. We know what oil, gold and the dollar has done. We know what the top performers for the week were. Now let's find out what our panel is looking at for the week to come. And of course, ladies first. Let's go straight over to Ms. Caroline Wong. What are you looking at this week? Why do you like it? And why do you like it so much for the week to come?
So my opportunity is Unity Group Limited, ticker code ULW. It's an ASX 200 company. It's a diversified provider of telecommunication services and broadband services.
Quite topical, seeing as Telstra has done so well this week, and obviously this is one that's doing quite well this week as well, yes?
Speaking of which, Bloomberg actually said that it's a top-performing ASX 200 stock in the last financial year.
Wow.
It's very, very good.
So it was the top performing one for the
ASX 200.
Okay, cool. Talk to us a little bit more about what they are and what they do.
So they do broadband services, telco services. They also engage in data analytics solutions to governments, wholesalers, as well as retail customers. So macroeconomically speaking, with all the property boom that's going in Australia, we can say that no home is complete without a broadband service. I'm sure all of our homes, we're all connected to broadband, NBN, that sort of things. Yes.
And they do quite a bit of stuff in the industrial space as well. So we're talking about big connections for big warehouses and maybe even things like airports or big sort of companies that are sort of coming out. Is that correct?
Correct. So working with governments, that also means a steady stream of income, so you get recurring revenues. And if you look at the financials, they haven't been listed on the Australian Stock Exchange for a very long time. It's just 2 years. But in 2019, they actually had negative 5 million in earnings. But 2020, that actually became 21 million.
Wow, so positive. So they flipped from being negative to positive by a sizable amount.
Yes, exactly.
How much were they negative in 2019?
So earnings was negative 5 million.
And then they flipped that and then made 21 million on top of that in a year.
Yes, correct. And on top of that, profits in 2019 was negative 13 million. And then in 2020, it's 16 million.
And now one of the things I do notice is they've actually halved their debt. They still hold debt, about 385 mil-ish, but they were at 700 when they first started. So they've actually paid down their debt quite significantly. Which is phenomenal when you start to think about all the margin trimming that comes into a product and a service like that.
Yeah, but not as phenomenal as the chart. If you pull up the chart, you can see it's such a beautiful chart. Since November 2020, it's making higher highs and higher lows consistently. It recently tumbled about 7%, but it's looking as an attractive entry point. And if you look at the stochastic, it's heavily oversold, looks to turn positive soon. And with all that we've said earlier, it looks like a very, very attractive
That's and what, $3.45 or something?
30.
So this is something. I mean, if you're looking for to get something quite early on, this is potentially something that could be at a big space to come. Yes. Very, very good. I love that one. I think that's absolutely brilliant. Something a bit different. Dr. Adam, what are we looking at this week? You can't do CCP. It's dropped. Well, you can't do CCP this week.
I will not.
But you might be able to talk about Orocobra because we all mentioned Orocobra last week and that went up quite a bit.
Actually, there was another one that I even like better. So that is
even better than Orocobra.
Yeah. So that one is called Decodator.
Okay.
So I was looking into IT companies, and this one was in particular one I was really fond of. So this one is it's a provider of distribution for IT goods. So one particular example is Microsoft News Surface Hub. So this is an interactive whiteboard that Microsoft is providing.
Yes, I remember them. We looked at them like last year for the office and for the firm. They're quite cool, aren't they?
Yeah,
they're massively interactive.
Not only it's really cool. Guess who will be the main Australia distributor? That was announced this week.
Wow.
Is it?
That is Decodator.
Okay, cool. Suspense.
So many
You're
other
going red, mate. You're very excited.
Yeah,
I love this. This is good.
There's so many other things to mention. So I was looking like profits, revenue, income over like over the last year. 4 years I was looking at. So they're up again and again for all of these metrics. And it's like also looking at the return on equity. That's over 40%, so 44.55, and that is a really high number. So the financial data is really, really good. And okay, so let's also look at the chart because it's like a beauty. So like you're looking at reaching higher highs, higher lows, open alligator teeth, positive the MACD and stochastic, and also an upside of more than 10%. So really, really nice.
We can just keep on that chart there. We can just down that chart, producer. We can see that there. Look what it did. Now, on the basic premise, and the basic premise of this is obviously they distribute a lot of computers. They sell computer and computer software. So throughout 2020, they went on a phenomenal run towards the north. Then we see the first half of this year as we eased off, and we had a few sort of things around maybe the COVID vaccination coming out. We saw it pull back, and now with COVID coming in, we can see that moving in a positive direction again. So I really like that. I think that's a brilliant pick as well, Dr. Adam. All right, Mr. Mossman, you've been biding your time very, very patiently over there. What are you looking at? And I feel like this is going to be a doozy.
Yeah, I'm not going to try beat the energy that our listeners just got from Adam. I'm going to bring it down a bit.
Well, I feel like we've shaken the roof off this place.
Exactly,
I feel like...
I think I need to calm him down as well. So I'll bring you this week nickel mines. They're a low-cost producer of nickel pig iron, which is, of course, a very important material that we're finding in our new modern economy. As we know, nickel is very closely linked to battery technology, and that, of course, flows into electric vehicles, and the demand for which I think we've been discussing very closely for the last 6 months. Last week, we bought Lithium Producers, which is another proponent that goes into battery technology, and as well, Australian Ethical Investments, which has done extremely well since we mentioned it.
That's been on a
That's
tear.
been a great performer, and it's investing in companies like the nickel mines, like the Orocobras, that are part of this new sustainable future. So that's why I'm going once again into that space.
But nickel mine's not entirely. I mean, it's not really
entirely. Yeah,
it's not really into the stuff that goes. It's more in nickel pig iron, which goes into stainless steel.
Yes.
So obviously you've got that infrastructure-led recovery over in China at the moment. Really, that demand for that stainless steel is really, really strong, I think.
Exactly, and I think that's tied once again to just a strong worldwide demand recovery, that a short-term COVID lockdown isn't going to impact someone like nickel mines. They do a lot of their production out of Indonesia, and they're seeing the export volumes remain quite strong, though they have fallen off. And on top of that, the price of nickel as well is looking very strong. Over the last few months, it's been making higher highs and higher lows, continually trying to retrace itself back to its all-time highs, its most recent highs, which personally, I think it will reach by the end of the year, and it's looking very strong at the moment.
I have a feeling that this may have been a stock that correct if I'm wrong, that we mentioned on the podcast 6 months ago, and obviously it rose to about $1.40, now back at $1. Obviously, if we can get back in at this stage, that'd be certainly an amazing thing. But talk to us more about what the broker calls behind it are.
Yeah, of course. We've got 3 institutional valuations. In particular, we've got Macquarie Bank, Citi, and Credit Suisse, and all of them do concur that the pullback it's had is probably been exaggerated. Okay, so they've got 14, 23, and 33% upside on this business, and I'd much agree with that. So they do move quickly as well. That's another business I do like. If you want a stock that moves fast and it's got a lot of ground to cover before its highs, nickel mines is your one. If we bring it up on a chart, I'll show you exactly right. So recently, as you can see there on the chart, we did make our highs earlier this year, and we have fallen back and found a very clear level of support. It's actually used that as a bit of a double bottom to bounce off. Those double bottoms were also its 200-day moving averages, which it's used as support to again bounce higher. Today's candlestick is after 5 or 6 trading days of complete nothing.
Yep.
We've seen high volumes, a lot of buying support, and a nice big strong green candlestick pushing it off its 200-day moving average. And that is a very clear, very, as Caroline said, beautiful technical buy signal that I very much like. So that's why nickel mines is my pick for this week.
Very good. I like the enthusiasm on that one. So you've got nickel mines, you've got DDR, and I don't know, UWL. Where's your
Unity Group?
Unity Group.
Unity.
Okay.
That's you and I.
Oh, the Unity. Okay. Very, very good. Thank you very much, ladies and gents. Thank you very much to you as well for tuning in this week. On behalf of everyone here at the show, I want to wish our clients, friends, and colleagues a safe and happy weekend. We look forward to seeing you next week. My name has been Will Brownlee, and this has been the KOSEC Show.